So how did the housing market turn out for 2023? Got one word for you, interest rates. Wait, that's two words. Interest rates was really the factor that was on everybody's minds, not only buyers, but sellers. So today we're gonna recap the 2023 housing market here for Orange County. Lots of information and hopefully it'll help you learn what happened. And then as we look to 2024, what we can expect. So stay tuned. I'm Jim with the Bishop team, your leading realtors here in Orange County, California. So let's rewind to about a year ago. A lot of people were saying a mix of things. We were gonna have prices were gonna be dropping. We were gonna have foreclosures and short sales and things like that. Others were saying, oh no, we're gonna have a great year. End of the day, interest rates not only held, but went up, peaking at about 8% in October, and that really kept a damper on the market. Inventory is the number of homes for sale. That went down just as much. So if you look at this next slide, we were down 29% in terms of the number of homes that were put on the market by sellers in 2023, 47% down from the number in 2019. So a lot fewer homes went on the market, decreasing the supply or number of homes for sale. So another way to look at the number of homes for sale is what's called months of supply. Let's say you have 100 homes for sale. So the number of homes for sale is the same at 100, but the months of supply is completely different. So it balances supply versus demand. So if you look at this chart, you'll see our months of supply has dwindled the last couple of years down to even lower than we traditionally are. In about the 1 month range. So demand is down, supply is down just as much. So that relates to pricing, which we'll talk about in a minute. So on this interest rate chart, you can see that, interest rates had gone to super low, historic lows, 2.5%, 3% the beginning of 2022, and then doubled that year. And then in this year, we actually went even higher, as I mentioned, to about 8%. We did come down to 6.5, closer to 6, and then it bounced back up here right at the beginning of 2024. What's going to happen? Well, the Fed is not sure. Nobody knows for sure. They say they might have some rate hikes. They might cut. I would look for interest rates to stay kind of in that 6.5, maybe even dipping into the high 5s through the first half of the year. And as we get towards the election, that they will do everything they can to get the interest rates down to spur economic activity. Now remember, short-term rates don't directly affect mortgage rates, but there is some influence on them. The number of homes for sale is often called inventory. It's just how many homes are actively for sale. There's homes for sale, homes in escrow, and then closings. In this chart, you can see the general trend has been less homes for sale at the beginning of the year. While we are up from 2 years ago, that was the all-time low. So we still are very low. And as we saw, there's about a 1 month supply. This next chart shows that normally through the year, inventory goes up, kind of peaks in the summer and then comes back down. But in 2023, it was pretty much flat and then dipped towards the end of the year. So that kept the number of homes super low, keeping supply low. Now, when we talk about demand, we'll look at escrows first. That's a leading indicator of what's gonna close. And again, that usually goes up in the beginning of the year and then comes back down. Of course, in 2022, it went up and then stopped when interest rates went up last year. If you look towards the end of the year, the number of homes in escrow in 2023 was actually slightly above 2022. So we started off 2024 a little bit above where we started off 2023. Still a super low number. So this next graph shows what we call the seasonality of sales. This is by month, and usually up in the spring and then down. Last year, our numbers were pretty much lower than any other year. Towards the end of the year, we did a little bit better than 2022, which was a super low number, and then back down at the end of the year. So if we look at the total sales per year, 2023 was really low, almost half of what it was just a couple of years ago, but below any other year that we can track within the MLS. And so super low net demand at the end of the day. So what did supply and demand do to pricing? Again, a lot of people are saying, oh, prices are going to come down. Buyers are waiting for prices to come down. And they did after going up. So we started the year and pretty much went up throughout the summer and went up through the winter, spring, and summer. We did have a little bit of a dip. Remember, we said interest rates hit 8% in October. That had a slight impact on pricing. It came down a little bit, but some areas are still at their peak above where we were in 2022 when interest rates really kicked us in the gut. So this chart shows us three things. It shows us Irvine, Laguna Niguel are at their peak. South Orange County is about 3% below the peak, but you can see the trends generally go in lockstep, and that's been the net effect of supply versus demand. Bottom line, if you were a buyer waiting for prices to go down, didn't quite work out. Interest rates came down a little bit, so you may or may not have had your monthly payment affected, but prices went up. So in summary, for 2023, we had a somewhat slow sales. We were down 20% in the number of homes for sale in our area. LA was seeing 50% fewer sales in certain areas. So it's really kind of a tale of two markets. You had buyers who were maybe putting a minimum down, 10, 20% down, were really impacted by the interest rates. And then you had cash buyers who were not sensitive to the interest rates and were moving forward. So it was a mix. If you were a seller, you did have appreciation. You didn't have that crash. If you're a buyer, you probably bought at a good time, depending on how you bought. Because once interest rates go down, you're going to have a lot more buyers competing. Prices will probably continue to go up. And if your interest rates go down, if you already bought, you might be able to refinance at a lower rate on a house that's worth more. So it's been a good opportunity for buyers who need a home to get into a home. And sellers, it's been good for them to take advantage of a limited supply, less competition, and able to get their homes sold for a good price in a good amount of time. So it's still critical to work with an agent like us who can help you navigate the market. We've seen sellers make huge mistakes and leave hundreds of thousands of dollars on the table. We've seen buyers not get the best deal that they could and overpay in some cases. So really critical that you work with professionals who do this full time. That's what we're here for. Stay tuned. Our next video, we're going to talk about predictions for 2024, what to expect. And so check back and see. So make sure you subscribe so you get notified when that next video comes out. You'll see what the crystal ball looks like. In the meantime, I'm Jim with the Bishop team, your leading realtors here in Orange County, California.